This is the Alpha panel, what you paid the admission price for. Thanks for having us. I'm Zach Pandl, head of research at Grayscale, and I will be hosting this conversation. Before we get into questions, why don't I just go down the row? Can you tell us your name, what you do at your firm, what your firm is up to? And then we'll take it from there.
Hey everyone, Matthew Sigel, run digital assets research at VanEck. We've got about 110 billion in mutual funds and ETFs, 2 billion of that in crypto from ETFs, 2 private funds. We have an NFT platform, a stable coin, a new venture strategy. So building a lot and getting some inbound phone calls today. So it's a great day.
Hi, everybody. Jeff Howard. I'm a partner and head of North America at Nonco. Nonco is a digital asset OTC liquidity provider for institutions only. So we provide liquidity in spot, derivatives, structured products, and a lending book as well. Again, just for institutions across a whole range of counterparts.
Hi, everyone. Josh Barkhordar, head of U.S. sales at FalconX. FalconX is one of the largest prime brokers in the crypto space. We operate within spot, derivatives trading, credit, custody, and most recently, FX trading.
Hi, everybody. I'm Ryan Silva, head of trading at BlockTower Capital. We are a crypto-native hedge fund founded in 2017.
Great. As you can see, we have an awesome panel here to talk about post-election markets. I'd like to start with Josh. Josh, in your role, you see lots of clients and have a sense of what people are doing, how things are changing in the market in real time. Give us a sense of the last couple of days, last 48 hours. How are clients going into the election? What sort of activity have you guys seen in the last day? What are some of the most volatile tokens? Or what is turning over? Be curious to hear your perspective on client activity.
Sure. So going into the election, clients were already well positioned and very long. Bitcoin, Sol, primarily what we see is in the derivatives market. So call spreads going out to November, December, the highest fall being in November. And then going out to December, we saw call spreads of around 80 to 100K in strike. And then going out to March, they were positioned for around $100 to $115 call spreads. So they were already well positioned going into the election. And then a couple of days before the election, relatively quiet. Everyone was essentially feeling like the market was a tightly coiled spring. And then as the results started getting closer, clients really started piling in. The most active names were Bitcoin, Sol, some of the meme coins, Doge, for example. So we've seen these names very, very active in the last 24 hours.
And is Doge a institutional asset at this point among your clients? It's trafficked in a similar way as these other assets?
It's definitely caught the Elon effect. And so we've definitely seen a lot of institutional participation within it in certain client segments like crypto natives, for example. It's honestly one of the most actively traded names over the last 48 hours.
Amazing. Yeah, somehow it seemed so obvious. Somehow I missed it anyway, but it seemed so obvious. Ryan, can I ask the same question to you? Going into the event, how are you guys looking at things? What are your takeaways from what we learned in the last day? What does it mean in the very short term for positioning and portfolios?
I'll definitely touch on that. Again, everything I say is my own personal view, of course. Anyways, going into the election, I think what we've seen was a significant amount of de-risking across most participants. So most people had a lot of cash on the sidelines. They were apprehensive to take any directional risk going into this election, given that it was such a coin toss. And what we're seeing today is the kind of vicious response of people looking to aggressively re-engage in risk, re-engage across the risk curve. So notably, not only in Bitcoin, but also down the risk curve across various L1s. Seeing a significant bid into DeFi and anything ETH eco related as well. We can go on about that, and we will, but I think that it's indicative of most people being on the sidelines in anticipation of the results. And I think that the decisiveness of the result that we received over the last 24 hours gave fuel to more confidence to deploy capital now into the space. And that's what we're seeing, high volume day.
Awesome. Let's come back to Ethereum and some of the positioning questions. Jeff, can I bring you in on this as well? By the 10th panel of the day, everybody knows the election results, and so I don't want to belabor what we heard last night. So, the election, but also the broader macro environment. We have a Fed meeting tomorrow. We have Chinese stimulus. We have a soft landing for the economy. Equities have had an amazing period. How are you looking at the broader landscape post-election for crypto risk?
Yeah, so I generally try to be a contrarian, like in situations like this, but I honestly cannot think of really a bad thing to say about the current environment, specifically when it comes to crypto and Bitcoin in particular. Obviously, the election, but before the election, we had Chinese stimulus. That's going to be a factor in global capital flows. You have a Fed meeting tomorrow. 25 basis points, I think, is a sure thing. And then you have the election, and the election is just like an earth-shaking change in psyche, in regulatory environment, in momentum and enthusiasm, and getting people off the sidelines who were on the sidelines waiting for some type of change like this to be comfortable coming into crypto and Bitcoin. And so I think it's super positive, obviously. I think some of the positive knock-on effects will be more capital markets activity in the crypto space. So I think the IPO market will be open to crypto companies that had been shut because of the SEC. I think you'll see some potential mergers within the space, public company mergers, mining stocks. All of those things are just very positive. It's positive for spot prices, it's positive for equities and so forth. So super bullish, and we could talk specific election and regulatory stuff, but I'm super bullish.
Great, me too. Let's get to all that. Matthew, let me bring you in as well. I mean, what I wanted to ask you, we've done these panels before. I'm pretty familiar with your work, and you talk a lot about Bitcoin demand in different parts of the world, Bitcoin adoption. Where do we stand post-election, and in the Bitcoin story in the United States and globally? Are we going to get a Bitcoin reserve? Is that too far down the road? What are you thinking in terms of post-election demand for Bitcoin here in the U.S. and elsewhere?
Yeah, I think this news actually still will take some days to settle into the market. We can tell it from just the narrative in the mass media versus the online media. So just to dwell on the good points, because it really has been a great 24 hours. We called the election. We said Trump was going to win, reiterated it, saw the early polls out of Georgia, were able to act on some of that information and had the view that these crypto asset securities, specifically the ones that are named in lawsuits like Uniswap and Lido, would likely get the biggest upswing. And I think that this is probably a trigger for a change in market structure and leadership by the alts for some time. So that's what we've been positioned for. I think that honeymoon can last a decent amount of time until we start getting the personnel named in some of these key agencies. In terms of the Bitcoin question, got a call from a registered investment advisor this morning who had a 1% position in our Bitcoin ETF and said, please convince me to take this to 3%. So I think there's going to be a lot of upsizing as the asset class is de-risked. And I am, particularly excited to watch the geopolitical developments. So next week, there's a big conference in El Salvador, the Adopting Bitcoin conference. We at VanEck, we run some emerging market debt strategies. So we've done quite well in buying the sovereign debt of countries that have been aggressive in Bitcoin adoption. El Salvador, Argentina, Kenya and Ethiopia are now on board. And I think with this Bitcoin reserve bill that Senator Loomis is putting forward, there's going to be a lot more momentum in the frontier markets to monetize some of that energy. So the Green New Deal has been killed, and now we're getting kind of the anti-ESG backlash, and I think it's going to legitimize Bitcoin mining for a wide swath of the emerging world.
I love it. Let me pick up on your point about altcoins and the regulatory picture. I'm sure everyone will want to weigh in this, but maybe one quick follow-up. Bitcoin dominance has been a straight line up for a while. Is that topping in your perspective in this honeymoon period? Is it long enough that we can say we are near the top for Bitcoin dominance?
That's my call. Yes.
Yeah, I like it. Anybody else want to? So let me bring the others in. Maybe starting with you, Josh, again. regulatory changes post-election and what it means for the appetite for altcoins versus Bitcoin. Anything specific you're looking for, you think that your clients are focused on?
Sure. So I think definitely we're going into a much more bullish environment in the regulatory landscape. We're going to get more regulatory clarity. And as a result of that, I think you are going to see clients becoming much more receptive to altcoins because it's that type of environment where you hopefully will get more clarity on stablecoin legislation. You'll get more clarity around FIT21, SAB 121. And so all of that capital coming into the space with much more regulatory clarity bodes especially well for the altcoin space. So names like, layer ones that are like Solana and then the meme coins that are built on it, I think those are particularly going to catch a bid. I think there's also a narrative around DeFi, especially with the Trump administration, more so than the Harris administration would have offered. So I definitely think that we will start to see more capital flow into some more of the altcoin space. And I'm aligned with Matt there. I do think that we're reaching near the top.
A Bitcoin dominance.
Yeah.
I love that. Ryan, let me ask you the same
I
question,
actually
please.
agree. I also think that Bitcoin has to make a much more convincing high before that can really accelerate. So right now there's kind of this rising tide that's lifting all boats, and they're the people who have been first movers, like this morning over the last 24 hours, have rapidly repriced some of these very beaten down sectors. If you look at any kind of price chart versus Bitcoin versus ETH, so if you price any of these tokens versus Bitcoin or ETH, you'll see they're dramatically underperformed over the last 34 months, which is the Bitcoin dominance moving the other way higher. But in my view, both can happen. I think you can still see Bitcoin make new all-time highs. It's also the largest, most liquid asset that's going to have the most on-ramps for people to come in immediately, like this week, next week, etc. So we could potentially see in the very near term Bitcoin dominance continue to just stay sticky high here just for the next week or two. But then this kind of Cambrian explosion of risk and appetite that's going to come back is, in my view, yes, we're aligned.
I love this headline-making panel here. Bitcoin dominance topping at the TI conference. Jeff, do you want to weigh in on that too?
So I love shitcoins. I love them all, and I really do. And I think because of the election and Trump and the regulatory environment, I think there's been a lot of DeFi projects that have like stayed on the sidelines because they didn't want to launch in the U.S., whatever regulatory reasons, so forth. So I think now that this may get cleared up, and the regulatory environment shifts, I think there's going to be VC money that is going to be allocated to these new DeFi protocols. So I'm super bullish on that. But I will say, a wise man once told me that altcoins are just souvenirs on your Bitcoin journey.
Very good. Well, let me probe on one sort of set of altcoins. Let's say, Matthew, can I bring you in on this? So there's been a fair amount of hand-wringing this year about Ethereum's performance, and some of that was, we priced in an ETF effect. We didn't get flows, and so we priced it out. But what about Ethereum specifically post-election? ETH, BTC, Sol, ETH. Any thoughts on those kind of contentious crosses?
Yeah, so I used to work in equities, and we would operate on kind of the quarterly calendar of earnings releases, and you'd get your data dump every 90 days and try to fit it into your model and how how it aligned with your expectations of the world. And the crypto world, that P&L is available every minute, every day, and you can track the fundamentals in real time. So we pay a lot of attention to the fees that users are paying to transact on these blockchains. And what we noticed, and it was quite obvious, is that after the last Ethereum hard fork that was meant to cut prices essentially for all these L2s that are now proliferating, Ethereum's margins fell sharply, and they began taking a much smaller percentage of the fees that the end user was paying to transact. So ETH's market share of fees fell from the 60-70% range a year ago, 18 months ago, down into the 50s, 40s, 30s, and in early September, right around the peak of the Ethereum hate, we got an intraday print of less than 10%, and that for me was a contrarian signal, and I got quite a bit more optimistic that it was oversold, and that the key researchers and leaders of the Ethereum project there was maybe some alarm bells going off that they had like overscaled this blockchain, and there might be a few tweaks around the edges to restore some pricing power. So I think ETH is oversold. I think it's too early to say still who will be the winner. We've been very vocal Solana bulls. I'm wearing my Solana socks today. I think you can expect some new regulatory filings, on the Sol ETF with what will obviously be a more friendly regulator. So I'm not going to say which I prefer necessarily, but ETH looks oversold. Speculation is going to come back to this market. I don't think it's going to ignore Ethereum. Personal view.
I love it. Why don't we pick up that thread on new ETFs, market structure changes, et cetera? Jeff, maybe I'll let you start here. You're facing some of the ETF providers, crypto hedge funds. What have we seen in terms of market structure changes this year, and what do you think is on the calendar potentially next year now that we have the election confirmed?
Yeah, so not necessarily so much focused on the ETFs, but this year, just for crypto in general, and banking has always been an issue for crypto companies, and so Operation Choke Point 2.0 or Operation Choke Point 2.0 that occurred, but basically throughout most of this year, starting late last year. It's really hard for a lot of crypto companies to operate with tenuous banking relationships. A big part of that was Senator Sherrod Brown from Ohio. He was chairman. He was chairman of the Senate Banking Committee, an incredibly powerful committee that obviously anything crypto related would have to go through. And so he was a big architect of Operation Choke Point 2.0. And so he lost last night to Bernie Moreno. And so I think, people obviously pay attention to the presidential result and so forth, super important, but there are some other elections that were significant last night, I think that being the biggest one. So I think from a industry, infrastructure, banking perspective that allows capital to flow more easily, there's not as many restrictions, just a general sense that things are going to ease up from that perspective, I think is positive, and that's, going to happen as a result of last night.
Yeah, banking relationships absolutely core to running a business. Josh, what about you in terms of market structure changes this year, what your clients are focused on for next year? Anything top of mind?
Sure. I think this year especially has been tremendous for the market structure. I think the launch of ETFs in January was groundbreaking, and if you just take a look at this morning, the record amount of inflows into the IBIT ETF, right, in just 20 minutes, $1 billion, right? So for example, like the amount of inflows that we've seen when these new avenues for both retail and institutional participation to come into the space has boded very well for the ETF space. And now on top of that, you're now looking at getting options on ETFs. And I think that it also opens up, as we touched on the point about regulatory clarity earlier with FIT21, for example, you will now have the ability to eventually launch, let's say, CME futures contracts on Sol, XRP, and a number of other instruments and digital assets that already have reference rates on the CME. So this is all going to bode very, very well for the digital asset space as the ecosystem continues to evolve and more capital uses these avenues to come into the space, which bodes well for all of us.
Does anyone want to make a prediction on what the next ETF product will be in crypto? I don't know. Anybody wants to venture a first guess?
Well, the XRP, I think, will probably go first, but Solana should follow.
XRP and Solana.
Years. Yeah, we have a crypto huddle every Wednesday morning at VanEck that CEO Jan VanEck chairs, and he said today, "Hey, product management, you can restart the product development roadmap." So there's going to be a lot more green space to put out new products, active, passive. That assumes that Trump demotes Gary Gensler on day one, which I think is probably base case.
I think he promised us at Bitcoin 2024, so I hope he follows through on that. Let me change tacks a little bit, Ryan. I want to bring you back in and talk a little bit more about like market themes. I know you guys are pretty focused on stable coins as an adoption trend. But stablecoins are not an investable thing. It's just cash on a blockchain. So when you think about building a token portfolio and you're looking at an adoption trend like stablecoins, what does that mean for you in terms of where you're deploying capital? Is that for an L1? Is that a DeFi idea? How do you build the stablecoin thesis into a portfolio?
So if I were to give you this answer a week ago, it's a very different answer than what I'm giving you right now, right? In the sense of we have so much more perceived clarity in the market. So when we look at stablecoin growth, we're looking at roughly $172 billion now. And that has been a pretty significant driver of what we're looking at in tokenization space. Ultimately, this is like a payment mechanism, a payment rails that is only going to grow. Obviously, we're looking at ETH and Sol as kind of the primary beneficiaries of this. But if you go to different move chains as well, you start to see the like high frequency capability of some of these L1 alternative chains, like that I won't name, but that are higher throughput chains than even Sol, that can handle that kind of large scale processing that like traditional markets require. And I think that is going to be an avenue of significant interest.
Other themes that anyone on the panel is focused on. So I think we mentioned DeFi here, but among the altcoin space, so Bitcoin is a macro story. I think we kind of get the Bitcoin macro story. Not that it's not a very compelling and important story, but among the altcoin space, DeFi seems like a theme that people are picking up on. Other themes among lower market cap tokens that you guys are excited about at the moment? Anybody?
I think it's still important to look at the token issuance. The token launches from 2024, the vintage is renowned for its low float and high inflation rate. And you can see, how the L2s even are acting today, underperforming ETH again. We're in business since 1955 because we know about position sizing. So I would just throw out that like the difference in position sizing can literally be a 10x when you're talking about a token that only has 20% of its supply that's circulating. So that's why I hesitate to just say, buy all small caps. Even our small cap index is not really performing today. You got to find the tokens that are, either fully distributed or where you have a good sense that the supply that's going to be unlocked is not just going to be puked into the market every day.
And I just want to touch on that too, because it comes back to the market structure that you were talking about before, which is that the market structure right now in alts is quite fragmented still, and it does not take a significant amount of capital to move, valuations on some of these liquidity pools and to actually get tokens. So, in my view, as we have this more clarity and as we get more, capital that returns to the space that has been kind of shunned out over the last 18 to 24 months, that will improve the liquidity for alts, that will improve the liquidity for small caps, that will improve pretty much the whole ecosystem and allow greater institutional flow to really dedicate capital. Right now, you have to size positions small because they have incredible price volatility because of this lack of liquidity. And that is going to change, in my view, significantly for the better.
Yeah, I think some of the problem too is like some of these like high beta, low cap altcoins, like there's no like derivatives market to hedge. Like there's nobody really making option quotes. There's nothing you could trade on a centralized exchange, and so it's kind of a risky bet.
And why is what created the dearth of liquidity? Just for clarity, is that a kind of legacy of the most recent crypto winter? We haven't warmed up yet.
Okay, my personal view is that crypto markets have survived pretty much every negative headwind that's been thrown at it over the last, call it 2 years, right? Bitcoin specifically has been just leading the top with the ETF successes that they've had, but we've absorbed government selling, bankruptcy distributions, we've absorbed market makers liquidating, and the market structure now is just so incredibly balanced in my view. We're not seeing that excessive funding rates that we've seen in prior cycles. We're not seeing the kind of retail FOMO. We're not seeing imbalances in derivatives markets that have like pronounced call skew or a significantly high probability distribution. Really, the market is quite orderly and tame here, and that's been Bitcoin's dominance. And now that attracts more capital, it, in my view, will continue to trickle down to the rest of the digital asset ecosystem.
Yeah, I'll just add, like, to the question, what caused this is too many tokens and not enough use cases, right? And in the case where there is a use case where the DAO is actually providing valuable service, an inability to pass that value back to the token holders because you're breaking the law. So that's why we're, Uni and Lido are up the most today, is because there's some optimism that they might be able to actually do that and the token holder can profit.
Josh, can I bring you in on this one too, in terms of positioning, leverage? How do you read the market today?
Yeah, well, like just to touch on the previous point, I think as the space continues to evolve and you see more institutional allocation coming into the space, many of those managers will write checks to the crypto native managers that they've been speaking to for a long time. And so as more capital goes to those crypto native clients, those clients will tend to allocate more towards altcoins, DeFi, and you will start to see more capital also flow into like the majors. But those will likely come from pensions, foundations, endowments, and some of the larger client bases that we have. I think the crypto natives are obviously the ones that are, and the crypto natives, I'd say ultra high net worth, those two segments in particular are going to be the ones that drive more capital to the altcoin and DeFi space. And they are expecting to receive those checks that they've been waiting on for a long time now, which I think will be this coming year where they start raising more capital and start allocating to those assets.
So you would say that marginal buyer of altcoins is not fully invested today, and there is ability to add capital to altcoin portfolios.
There certainly is, yes.
Awesome. Well, what I want to do, we have just a couple of minutes left. I would love to just sort of walk down the panel in terms of highest conviction idea. Not everybody is allowed to say Bitcoin. So Ryan, I'll let you go first. Again, it's your own view, not the firm's view. But what would you say is the highest conviction view here, or risk reward trade, say looking into the end of the year?
Certainly. Looking into the end of the year, given the very definitive result that we had in the election, it definitely favors, alts down the risk curve, rotating that capital out of BTC and into alts.
I would say just by the sheer amount of interest in Sol that I've seen over the last couple of weeks and the call spreads that are pretty long dated, maybe 6 months to a year out, I'd say probably the $200 to $300 call spreads in Solana are pretty telling, and I think that's a favorable risk reward ratio.
I think with the upcoming continued massive structural federal fiscal budget deficits, I think the curve will steepen. I think they go 25 tomorrow. They may or may not go in December, and then they could be done for a while.
Yeah. Okay. So a non-crypto trade, I like that, and still an outside odds skipping in December. So decent risk reward on that pay if you think it might happen. Matthew.
Similar to the other guys, I bought some crypto asset securities this morning because I think those things might not exist once Gary Gensler is gone. So I wanted to grab some before they disappear. So agree on the Solana. I also think that some of these Bitcoin miners that are on the cusp of pivoting and allocating some of their capacity to serve the HPC and AI compute markets, there's a huge valuation arbitrage between what you pay per megawatt when you're buying, like a Core Scientific or a Cypher, and what you're paying for an Equinix or a Digital Realty Trust. It's a 10x valuation arbitrage, and I think the regulation pro-energy regulation is going to help close that.
Okay, amazing. I think I would echo the DeFi tokens, Uni, Lido. I agree. That to me is the thing that changes most dramatically from the overnight news, as they were sort of under attack and now can continue to develop those businesses. So what a breakthrough. Let's leave it there. Thanks to the awesome panel. I'm sure you can find them after if you want to dig in further. Thanks for the time.